are going to discuss the rules of debit and credit. In order to understand the rules of debit credit, first of all we must understand that what are the two approaches. Actually there are two approaches of the rules of debit and credit, and the one is traditional approach and the other one is modern approach. Traditional approach is an English approach, the modern approach is an American approach. So let us begin with the first one, traditional approach. In the traditional approach, we have to classify the items of a transaction into any of these three accounts. These may be personal account, real account and nominal account. Every item that you find in the transaction may belong to either personal account, real account or nominal account. We shall discuss later on. Next is the modern approach. In the modern approach, every item may belong either to the assets, liabilities, capital, revenue or expenses. So these are the five categories or five heads under which the items can be put. Whereas in the traditional approach there are three heads or three categories where the items can be put, and then we have to apply the rules of these three accounts separately. So let us begin with the first, that is traditional approach. So we have to understand what is personal account and what are the items that belong to the personal account. So all items, as the name suggests, personal, all items that directly or indirectly relate to a person comes under the personal account. Person means here not only the person but the firm, company, bank is also categorized as a personal account. So capital is one of the items that belongs to the owner of the business, therefore it is a personal account. Drawings is also a personal account. Borrowings is also a personal account. Bank account. Moreover, the other accounts are debtors and creditors account. Debtors are those from whom you have to collect cash or you have to receive payment. Creditors are those to whom you have to make the payment. So actually the debtors and creditors are representing those persons from whom you have to collect or to whom you have to pay. So debtors and creditors are also the personal account. Besides these accounts, we may also have some representative personal account. In fact, they represent someone. For example, the prepaid expenses. Prepaid expenses is not an expense. Actually, it is a personal account and it represents that person to whom you have made the payment in advance. So prepaid expenses or any other amount that you have paid in advance is also categorized as a personal account. If you have received amount in advance from someone, that is unearned revenue, that also represent those persons from whom you have collected money in advance. So unearned revenue is also a personal account. Similarly, the two items more, the outstanding expenses, it means the amount which is due but you have not paid. So outstanding expenses represents those persons to whom you have to pay. So outstanding expenses is also a personal account. And the accrued revenue or the income which is due but not received, that is also representing the person from whom you have to collect. Okay, so in this way we can write all these four items: the outstanding expenses, prepaid expenses, unearned revenue and accrued income. So these are also the items of the personal account. And now let us see what are the rule of these personal account. Rule of the personal account is debit the receiver and credit the giver. This is the rule that you will apply to these items. Debit the receiver and credit the giver. So if anyone who is receiving will be debited here, and anyone who is giving will be credited. So this is the rule you will apply. We shall take one example in order to understand this very clearly. So before giving the example, I can tell you the another account, that is real account. In the real account, all the items of the property or the resources of the business are categorized as the real account. So you are very much aware of the resources of the business. The resources of the business are the plant and machinery, land and building, equipment, furniture. There can be, these are the tangible assets, there can be intangible assets as well, like goodwill. These are also categorized as the real account, even it is tangible or intangible. Goodwill, patent, trademarks, etc. So every assets belong to the real account. And now let us see what is the rule of the real account. The rule of real account is that debit what comes in and credit what goes out. Suppose the plant, you have purchased plant, so the plant will come in, so you will have to debit. So debit what comes in and credit what goes out. Okay, so the cash is also one of the assets. So cash, plant, machinery, building, land, patent, copyright, trademarks, etc. So these assets, if they come in, will be debited. If they go out, if you sell the furniture, if you sell the equipment, so this will go out. In this way it will be credited. So this is the rule. We shall take the example of the journal entry. Now after the completion of the real account, we shall move to the last part, that is nominal account. The nominal accounts are, the nominal accounts are belonging to the revenues, expenses, income, gains and losses. So all accounts belonging to revenues, I'll write here, expenses, income, gain and losses. So these are the items. Revenues, on account of sale of the goods and services, you will collect some revenue. There can be other revenues like collection of the interest received, dividend received, rent received, discount received. So these are the various examples of the revenue that you may collect. There can be several examples of the expenses like salaries paid, wages paid, discount allowed, commission paid, electricity charges paid, telephone expenses paid, transportation expenses paid, insurance expenses paid, etc. Several examples of expenses are there in the business. So these are expenses. There can be some income also. Income, in fact, some point of the time we can interchangeably use the income and gain. Gain is on account of sale of any old asset. There may be some gain or there may be some loss as well. If the cost value of your old furniture is 8,000, you are selling it at 6,000, so of course there is a loss of 2,000. If the cost value of the furniture you are selling is 8,000 and you are selling it at 10,000, so of course there is a gain of 2,000. So this loss and gain will belong to the nominal account. Now come to the rule and how we have to put these losses and gains or revenue and expenses into the journal entry. So the rule is debit all expenses and losses, whereas credit all revenues, income and gains. So this is the rule. If you receive salary, if you pay salary, the salary is an expense, salary will be debited. If you make the payment of the rent will be debited. If you pay wages will be debited. Okay, so these are the expenses and therefore they are debited. There may be the revenues. If you receive commission will be credited. If you receive interest will be credited. If you receive discount will be credited. Okay, so in this way these are the rules of the personal, real and nominal account.